All right, let's talk some We company. WeWork's owner reportedly planning to move forward with its investor roadshow despite concerns about a prospective IPO. Joining us now is Joshua Franklin, M&A, IPO, and corporate finance correspondent at Reuters. Joshua, give us the latest where this stands, because I think there are a lot of questions as to whether or not this IPO is still going to happen.
For sure. There were reports that emerged kind of towards the later half of last week, kind of showing that WeWork was looking to take a pretty hefty haircut on the valuation that it was going to seek in the IPO. So last valued at the start of the year at $47 billion. Our reporting was, on Thursday that it was maybe looking at a little over $20 billion. So, for the late stage investors like Japan's SoftBank, that was going to be a pretty decent discount. But then, and then on Friday we kind of made some more calls, and it looks like, the plan at the moment is still, despite concerns around the valuation, that they're still planning to launch their IPO, sometime this week. All plans subject to change, and for sure there are a lot of discussions going on, but that's our understanding of the latest state of play.
How much is the concern or hesitation endemic to WeWork itself, its business model, et cetera, versus the uncertainty in the macro environment, appetite for investors, kind of lessening for unprofitable companies? What is the balance there?
It's a really good question. I feel like a lot of the concern is quite WeWork specific. Obviously August was not a good month for stocks, but overall, people in the market consider the IPO window to be pretty supportive. We've had a lot of strong IPOs this year, with Beyond Meats and Zooms, companies like that. And WeWork, there's a lot of scary numbers around that. And if you're an investor in Uber and Lyft earlier this year, which were other high-profile loss-making IPOs, like you're hinting at, you have a little bit of reluctance to go back in for another company with steep losses. You add to that concerns around the corporate governance, the fact that Adam Neumann, the CEO, is going to be retaining control through superior voting class shares, the fact that there's been these kind of self-dealing stories that have gone around about him renting properties to WeWork that he owns and pocketing money from that, the lending arrangements that he's had. It's a lot of things that have made investors a little bit concerned.
Well, I think too, it's kind of late to the game, right? I mean, we've already seen a ton of growth companies go public this year. So think about it. If you're a pension fund, if you're an endowment, if you're Fidelity or one of these big institutions, you've already had the opportunity to get into a lot of IPOs and build up your portfolio that way. I wonder if that is one of the many reasons perhaps that we are not seeing as strong of demand probably as the We company would like.
For sure, as you get later on into the year as a portfolio manager, you unless you really need a kind of Hail Mary pass, you become a little bit more risk averse because you don't want to do anything that's going to throw your returns for the year too far out of whack. We're still, we're not that close to the end of the year. We're only kind of starting in September, and I feel like people will still put money in for companies that they believe in, investments that they think will pay out for the long term. I think with WeWork, the problem is there's just so many concerns or so many question marks that you have around that company and what it's going to deliver for you until the end of the year. I think that's where a lot of the concern comes from.
And they also have such ambitious plans to grow globally and signing up for these long-term leases, taking on a lot of that risk. What does the We company have to prove to investors at this point? Aside from the corporate governance issues, what do they have to prove to get that investor demand that they need?
I think there's several things, but probably among the kind of most important is to convince people that they have, profitability is on the cards for them. They've described profitability as a managed outcome for them. So they believe, that the only reason they're not profitable right now basically is that they're investing so much to grow the business and to expand into new areas in real estate and technology. Making investors really feel like that is, that's, to be taken seriously is going to be a real challenge. And also how they would manage any downturn, because a little bit like you were saying about conditions, they are seen as, by some, as a play on a kind of a hot macroeconomic environment. And then when you go into a downturn, which some people think we could be on the horizon, how is WeWork going to navigate that?
I think too, I mean, a lot of the company's future, regardless of whether or not it is public, does hinge on this offering, right? I mean, it's going to be really hard for it to do the debt offering, which I think it wants to raise $4 or $5 billion on if this IPO doesn't go through, right?
No, exactly, and it's a really interesting kind of subtext to all this, and it's as much as $6 billion that Wall Street banks have committed to providing in a credit facility for them, but that is dependent on them raising at least $3 billion in the IPO. So it's not just, $3 to $4 billion in an IPO that's riding on this. It's upwards of $10 billion if you include the debt in the whole thing. So it's definitely about as high stakes as it gets in corporate America IPOs.
Do you think this is the right decision for the We company to continue on with the IPO despite all of the concerns?
They definitely have a lot of better paid advisors than me to give them advice on whether or not it's best to continue with it. They definitely have, it is a heavy lift for sure. But I feel like, the IPO is has always been on the cards for WeWork. You know, it's going to be the thing that allows them to exit, allows a lot of insiders to cash out of their shares. And it's just, you have to ask yourself, do we think conditions are going to get better? Do we think investor perception around this business is going to get better in the near future? And that, I think, is going to be one of the key questions that they're going to have to think about.
All right, Joshua Franklin, breaking down the most important headlines for us. Thanks for joining us.
Thanks, guys.